A very warm afternoon to everybody. It's about 2 o'clock and 11 minutes, and we are having a live session together. Today, I have with you got many interesting things to discuss, and we're going to take this session forward in a very interesting way. Markets, although a little indecisive, have been interesting in the recent past. Now, before we begin, I again welcome all the new faces over here. How many over here have actually done a webinar with me previously or are my past students? Okay, two past students are here. A couple of you have done the webinar with me previously. For those who have never been in a webinar with me previously, uh, you can go to my YouTube channel and you can find out very interesting things in the last weekend webinar we had, etc. Very interesting things, very substantial content is there over there, and you can have a lot of learning experience through the free YouTube channel. And those who are watching this on YouTube can join the link below to follow me on Telegram channel. I welcome you all again. And this is the chart of 15 minutes for Nifty. I'm going to make the hourly chart. I'm going to make this the daily chart now. So I have purposely taken a very clean and naked chart just to show you, how I use my indicators and how I use my technical analysis and how I go about tracking the markets technically. Now, in the recent past, especially in the last 5 to 7 days, the markets broadly, the broader markets, Nifty, Bank Nifty, have not really been quite a trending market. It has been more of a sideways journey, but there has been a certain positive bias, you can say, or there has been more or less sideways movement. Amidst this, a lot of stocks have performed weakly and some stocks have performed strongly. Now, as we see that there is this phase which is going on in the market, generally it describes a sideways accumulation or distribution. One of the important things to note is that here we had important resistances which were here. I have mentioned about this resistance zone in my weekly channel, in my weekly YouTube video on the weekly technical analysis. However, the weekly charts seemed very promising. Okay, now we have to give market the room to move a little bit. Markets just don't go up and just don't go down. They take rest and they take time, and these things take time to develop when they're good setups which develop. From that perspective, there has been a little bit of a lull period. Amidst all this, there have been sectors and stocks which have shown some interesting things. So let's take up Sun Pharma. If somebody asked about Sun Pharma, spoke about Sun Pharma right here. So let's take Sun Pharma. This was Mr. Shakti, who is my student from the previous batch, and I saw his message that he traded Sun Pharma for, I'll just open the message again, Mr. Shakti. He traded Sun Pharma from 535 to 525. Am I right? Can you describe one or two lines what is it that you saw? I want everybody to learn from you. Okay, so Sun Pharma, as we can see, has been an ongoing chart, and in the recent past I had also taken a trade somewhere around this day because it has come to a very strong weekly support. This was a very strong weekly support zone which had come. Now this weekly support zone was actually at the level of around 550, 555. So I was looking at this very closely and happened to take this trade on the long side. Of course, there were other things which were giving me conviction to go long on this stock, and he sent the message. He's saying in 15 minutes chart, I saw a flag. Yes, so there was a flag which was a bearish flag which was present in the 15 minutes chart today. So here's the 15-minute chart, and all of you who are new to technical analysis, try and grasp from the mass psychology point of view what is happening. What is happening is that in an ongoing downtrend, okay, in an ongoing downtrend, we see the stock which is Sun Pharma has come and taken a support also. Now, amidst that, while it is taking a support, we are seeing that it is showing us that it has taken a support, it has pulled back, but this could be a pullback in an overall downtrend, saying the downtrend can continue. This pullback got power from this support zone, And because the support zone is a very important interaction zone which is tested again and again, when it is broken powerfully. I always say, just don't look at how, something coming to a support and coming to a resistance. See what it does when it comes here. And in this case, it has come here with utmost power. Now, when there is so much power in a move, and there is a support which is right underneath, it is broken as if it's nothing. And that breakout was something which got the stock on his radar. Now, coming to the stock from the 15-minute point of view, there is a flat pattern which is being made, or in other words, we can say a sideways correction after a down move, after a strong down move. And that goes to show that while this is being made, there is a chance, that the downtrend may continue, right? And the downtrend is starting when the breakout happens at around this 535 zone, and then there is this further fall which you got about 2% in intraday. So congratulations on that trade, Mr. Shakti. On the broader markets, my comment will be, because a lot of messages keep coming to me day in and day out, and today especially, Nifty again showed as if it is going to break above these resistances. And one important thing to notice, the first hour candle in the last 2 days has been very bearish. Okay, the first hour candle in the last 2 days have been very bearish. This goes to show that the moment the market gaps up, there are many strong hands which are actually to you know ready to sell in that scenario. And when shorting is happening in that scenario, or when selling is happening in the scenario, when profit booking is happening in that scenario, people should be very careful about how the further developments are being made. And if the further developments are going to be from within this region of selling, which is the initial selling which has happened, that only goes to show that initial selling happened, the price is pulled back, and the stronger hands are waiting to sell more and more. Now, this process is called distribution. How many of you understand what distribution means? Raise your hands, please. There's a button there to raise your hands. Right. Some people understand what distribution means. What distribution means is the process or exchange of stocks, the exchange of stocks between two hands, the stronger hands and the weaker hands. And the process of distribution is very evident over here when there is the charts which we can see. Not only is the process of distribution very evident, the zone in which the distribution is happening is also a very strong selling zone. Now, this candle, which is engulfing the previous candle, is called a bearish engulfing candle. A red candle which completely takes over the body of the previous candle is called a bearish engulfing candle. This area of the bearish engulfing candle becomes a resistance zone. Candles may not be traded or used only for the purpose of understanding, where to buy, where to sell, but candles can be also used to define past supports and resistances. So in this area, there is something which is happening again. When the price comes here, it reacts in a certain way because price has memory. And again, in the hourly chart, which is the one smaller time frame, we see the same thing is happening. So of course, in these region, a good sell position can be taken on intraday basis. A lot of other stocks saw massive selling happening. I had kept my eyes on Century Textiles, and Century Textile was very interesting on the 15-minute chart. It gapped up today, and in intraday, it made a very excellent descending triangle pattern. Excellent descending triangle pattern. Now, what is a descending triangle pattern? Again, most of the times, again, I repeat, not all the time, but most of the times, this pattern leads to a fall. And what it is showing us is that there is a distribution happening. In the process, again, stronger hands are giving away stocks and the weaker hands are buying. So you can see that there is a series of lower highs. This price structure talks to us about bearishness. When there's a series of lower highs, but there's a very strong protective zone where the market is not being able to go below. And when the strong protection zone is tested, tested, tested again and again, the moment it breaks with a lot of power. So at 894, it was a wonderful shot to be taken in Century Textiles from the intraday point of view. Now a lot of people call me up and ask me, sir, can we trade intraday? Can we not trade intraday? Believe me, some of my students, they trade only intraday and they make a lot of money. They trade only intraday and they make a lot of money. Or maximum they take a BTST or something. Generally, it's not more than 1 day. And yes, some of them take purely intraday trades. So yes, you can make a lot of money doing intraday. It is just that you have to wait for the right times for the moves to unfold. So for example, the first half of the day was a little slightly lull for me, not doing much. But the better trades started to come in the second half of the day. And even as I was just taking up this webinar, I actually closed some of my short positions steadily so that I could focus in teaching you all. Now, what you have to track when you are seeing such a scenario is when market is going to change its course. When Nifty was positive and from there it became negative, it's quite a changed course which the market has done. In this scenario, we're going to see a lot of stocks perform like this as Century Textiles has done, which means give a heavy blow on the chart. And this is what you have to gauge very steadily. And when the markets are ready to break out, some of the front liners, okay, like for example in the morning it seemed a little green scenario as it had opened. Now over here, until and unless many stocks are really showing a lot of bullishness, this may not sustain. So one needs to be very careful regarding this. I had a few stocks on my radar which have been performing according to what has been mentioned in some of the past videos, and one of them being Lupin. Now, Lupin, according to me, is a very good shorting opportunity from the positional point of view. It is an excellent shorting opportunity from the point of view that if we go further below these zones, which we are very close to now, okay, if we go below 830 and sustain there, then we could see very strong falls that could happen. Now, how it unfolds is something which we have to leave to the markets. Why? Because like in the Sunday video, which you can find on YouTube, it's uploaded on YouTube, a Sunday video made on weekly technicals, I was speaking about the farmer stocks and something interesting happening everywhere. And some of them were bullish, like for example, Oro Pharma. Till then, some of them were bullish. But in the middle of the week, there had been certain scenarios. And I had taken up Lupin from the bearish point of view once. If you see in last 2 weeks, I've been talking about it or something like that. So we saw a shooting star on the weekly chart, which is not an ideal shooting star. It doesn't come at the end of extended move, but it is ideal in the sense that it is showing us a rejection of higher prices. So candles are simple to understand. They show us a rejection of higher prices when there's a shooting star sort of pattern. And this rejection of higher prices is something which has a very bearish focus. Again, in the zone of this weekly candle, in the zone, we see bearish developments happening. So in the zone of this, we start seeing much further falls which are happening. So again, an interesting place to be. From the selling point of view is to keep Lupin on your radar. Lupin on your radar from the selling point of view. Then, since we are talking about pharma stocks, again, Biocon is still under development, but yeah, we can see some interesting moves happening in the next 3 or 4 weeks or 2 or 3 weeks over here. Let's take up Nifty. Let's take up Bank Nifty, since a lot of people asked the question about Bank Nifty. Honestly, in the recent past, I have seen Bank Nifty has shown a strongly upward bias. The only problem is that there is not enough breadth. Like for example, I'm going to the Bank Nifty stocks. Okay, I'm choosing the Bank Nifty stocks and I'm flipping the stocks on the daily chart. Okay, this is Axis Bank. It's holding up. This is Bank of Baroda. This is Federal Bank. This is HDFC, ICICI. Again, ICICI I had spoken from the bullish point of view in my weekly video. Um, we have IDFC, we have IndusInd Bank, we have Kotak Bank. So all in all, we are seeing only two banks, which is ICICI and Axis, which are holding up strongly. This is axis and NCC. So amongst the bank nifty, the breadth is not very strong to lead to a breakout that can really, go past to 26,000 and really go higher. Getting the point? Are you all with me? The market breadth is so important. How many of you are understanding what I'm trying to say? Please raise your hand. There's a button there to raise your hands. Okay. Most of you are. Most of you are. Right? Okay. Now let's talk about the open interest data. Now, one of the things which these videos are known about is sometimes we take up how the open interest data on options is performing. And if the open interest data is very, very interesting, we can find where the market is going to. We can find one of the variables showing us some sort of a pointer where the market could lead. Okay. So in case of the open interest data, we see that around the strikes of 10,500 and 10,600, there is a sort of unevenness. Okay, we see that the standing open interest of puts and standing open interest of calls over here, that puts are very, very strong. So this goes to show that 10,500 area could provide as a certain support zone. Okay. Now, why I'm talking in this language is because you have to understand the essence behind the concept of open interest. The essence behind the concept of open interest is that the weaker hands are the ones who are generally buying options, and the stronger hands and the bigger hands are the ones who are generally selling options. So, when that kind of thing is happening, we see that the weaker hands tend to be on the wrong side most of the times. So because weaker hands tend to be on the wrong side, you don't want to be on the wrong side. That is the whole mantra. If we can follow that, we can understand which is the place where a lot of buyers come in vis-a-vis a lot of sellers. So for example, today, if you notice the intraday and you notice what the changes of open interest is, if you simply notice this, the change in open interest for the puts and the change in open interest for the calls, we can clearly see that a lot of buying happening on the calls by the weaker hands, and so much of buying is not being is not happening on the put side. Okay, although there is a positive open interest, it is not a negative open interest. So the market correction may not be too deep or may take some pullback also. Okay, this is what the data is trying to show us. But if you saw in the, like, about an hour back or something, this build-up had started to happen very strongly, whereas people were exiting their positions on puts and booking small profits or whatever it is, you know, the open interest contracts were being closed. Now, on the other hand, at 10,600, we see a strong open interest, standing open interest, whereas 10,600 open interest for puts is not very strong. So if the market has to go up, we need to see a lot of buying happening in puts, a lot of open interest which stands in puts. Only then we can say that the yes, the market has is gathering enough steam from the open interest point of view to move higher. Until then, that part is questionable. So, for example, again, you will see the similar things happen on the Bank Nifty weekly options also. Again, with Bank Nifty, let's check up what was the interesting part on the hourly charts today. As far as Nifty was concerned, we did not see the Nifty going above the morning highs. But Bank Nifty did show us some strength in the morning also. And because this strength sort of continued, uh, it may have trapped a lot of people. Now, how many of you can notice that the candle size is getting smaller and the wicks on the upper side are getting longer? How many of you can notice that the candle size is getting smaller and the wicks on the upper side is getting longer? Raise your hands. Raise your hands, those who can notice what I'm trying to say. Right? And in between, if you have any questions, feel free to ask. Okay. So we see that there is some sort of a shaving which is happening every time buying is coming in stronger. stronger sellers are coming and they are not letting the prices go up. So the price is sort of getting exhausted. I'm using very simple language and simple parameters. I can talk about complicated indicators, etc. right now. But let's just see it from a simple point of view so that tomorrow you can go back and apply it. Okay. Now, one of the indicators I speak about is a Bollinger Bands. Right. Now, Bollinger Band, for example, on the hourly chart over here. Now, I always say Bollinger needs to be followed from multiple scenarios. Bollinger is not just like, okay, this goes above this, is equal to this, or is equal to that. Not really. Now, Bollinger is trying to show me that there is a certain degree of bullishness which has kicked in because the price has moved from all the way to the lower band to the higher band. Okay. Now, this has not happened when we were sideways. This has happened when we are in a bigger band, big band area. So automatically the middle band, or currently which is around to 25,700 zone, becomes important. But the extreme has been also touched. So in the morning when we saw that the extreme is being touched and the market is not really being able to respond from that extreme, that means the market can go either sideways, high likeliness of going sideways, or showing us a deeper cut. So here in this case, we saw that the market is reverting back towards the middle line. So whenever there's an extreme in price, we see that there's a reversion to the middle line. Extreme in price, reversion to the middle line. In some cases, the extreme in price sustains, and that sustenance is also a very bearish signal. So when does it sustain? When it is crossing from the middle line most of the time, not necessarily from the absolute. Like for example, from the absolute low, it went to the absolute high. So the enough of a move has been made, and it calls for some sort of a correction. So this is the logic, and that is why the upper part of the Bollinger Band logically becomes one of the strong resistance areas. Are you all with me? And in the middle, if you have any question I want to ask about any stock, etc., you're free to. Feel free to. Right? Okay, somebody is asking about Reliance. Okay, let me take up Reliance. Okay, I will take SBI also. Fine. So somebody is asking about Reliance and somebody is asking about SBI. So Reliance, let me just cut open the chart of Reliance from different perspective. So here we see that there's an overall long-term uptrend. No doubt about it. No doubt about it. Reliance is one of the stocks which is in an overall very broad uptrend. However, we saw that in the recent past, the Reliance stock has, shot up and then it has thudded back to the breakout zones. Now these are the breakout zones. If I have to make you understand the concept, it will take time. For that, you can join my 15 session course. But if you want to understand from a basic point of view, these are the zones from where the pattern actually broke out earlier. And this is providing as a very strong support zone because a resistance which is broken tends to act from a support point of view. Now, even though the prices sharply went down over here, it kind of made a new low and made a strong pullback. So it is hovering above the breakout zone. That from that point of view, we give it a plus. That is bullish. In the recent past weekly charts, we have seen mostly sideways move happen. So that gives us a point of view of indecision. And then in the hourly chart, which is more apt for people who are trading intraday, um, we saw that this sharp move from the low to the high retraced back to the middle band. From the middle band, it sustained, and therefore this sustenance was a bullish thing. Bullish thing. In the recent last 3 or 4 days, we see again bearishness kicking in, and therefore it could mean some sort of sideways movement can continue. So my view on Reliance would be to wait and watch. It is not necessary to take a trade all the time. I take like a few trades in a day, and most of the times I am right, so I end up making some money consistently. And I don't look at the market 24/7 or tick by tick. That is an unhealthy way to trade. I hope all of you are understanding. It is not healthy for you to trade and watch for something every time. Okay. And whenever you take a trade, take it out of some basis. Next up, we're going to discuss SBI. Now, as I said, when we looked at the open interest data, I said there is bearishness. However, to some extent, the bearishness, in my perspective, the bearishness is not really so much pronounced. There can be a certain pullback, but we are in a volatility which is extreme. So, if you are short, better to be on the short side and keep your money management tight. Okay. Uh, okay, I'm coming to other stocks also coming in, so I'll come to that. SBI, as I mentioned a few days back in my Telegram channel, you can see the post is there. SBI had a strong support zone at 282.7 area, and after breaking that support, it actually dragged down further. But on the daily chart, you have to notice that there's a strong up move which has happened. So when there's a strong up move which has happened, and if it is showing us there's a strength in the trend, then the down move generally does not happen with a lot of fireworks. A down move is slow, mellow move, which is happening over here. So we need to consider that. And on the daily chart and the weekly chart, still there is a chance of some bullishness, but may not happen immediately. Okay, may not happen immediately. So the view on SBI would be basically to wait for bullish moves on the hourly chart once a little bit of correction is done. Okay, that would be the view on SBI. Also, if you notice, like, okay, in the very short term, if I have to speak, and forgive me, it's quite short term, I'm going to speak right now about this. Uh, if we look at this, why I say forgive me, because many people don't like it. I do say that you can trade any time frame. We see on the 15-minute, 10-minute, 5-minute chart of Bank Nifty, it has come to a support zone. It has come to a support zone. And as I am speaking also, it just came to a support zone. In front of you, I'm looking at the chart. I always have these points noted down in my homework. Now, this support zone, and homework does not have to mean always what I saw yesterday, but there were significant price moves which happened today, which became important for me to put on my radar. So this place, again, we are seeing that there's some buying coming in. Again, as I spoke, that the bearishness is not much. You can see how Nifty has moved, right? So if you can gauge the markets, some of my students are excellent at trading Bank Nifty options, and they must have. I know in a few minutes I'll get a message they shorted this option, shorted all the puts over here, and a little bit of here and there the puts will move, bang bang, 30 rupees, 40 rupees, they will just give profits just like this. So you can see how this is behaving. Okay, if you have the knowledge of the support zone, it is very easy. It's just a simple support zone which came here. There is a lower wick over here, and the area of the hammer, at least once the market should take a strong support over here. Now, of course, we can go higher and fall down like we saw in Century Textiles, no doubt about it. So if you're positionally short, you should have tight money management, because a down market is accompanied with strong pullbacks. Okay, now coming to the next questions. uh, okay, I'll go one by one. So first by Mr. Sanjeev, and then by Mr. Padam, and then by Mr. Fani. Okay. So first, Mr. Sanjeev is asking a question: which is the best time frame for trade intraday and positional? Okay, a question I keep getting asked all the time. We have to understand that time frame is for me and you, us human beings. Market is perpetually trading. It is trading even when we are sleeping, right? Market is perpetually trading. It is trading even when we are sleeping. And therefore, if I put together, like for example, I take back the example of Century, take you back there. This is the 15-minute chart I showed. Now something put together on the 15-minute chart, on the hourly chart, it seemed like not something very, very big, right? But it is the 15-minute charts put together which becomes the hourly chart, and then the daily charts, and then the weekly charts, and then the monthly charts, and then the quarterly charts, right? So all the way down, if I go, I can figure out how the steam is being created to go to the next level. So a price which is in an ongoing uptrend over here, at first it will be in a downtrend. So if you are intraday trader and you're looking at the hourly and 15-minute charts or hourly and daily charts, you can easily be able to understand from an intraday point of view what your directional biases are and potential reversals are. So if you're intraday trader, go for daily and hourly, but keeping things in mind, like for example, I kept in mind that these are the weekly zones of resistance. I mean, these are important from the weekly perspective also. Okay, keeping these things in mind will definitely be helping you. Now, if you're a positional trader, you can go to the monthly chart, but I don't really like talking so much about it simply because a real positional trade doesn't come day in and day out. It comes once in many weeks or many months. And if you are not very accustomed to understanding that the charts very properly, then it's a problem. Like I have one of my clients who, like I do a group course, which is a full 15 session course. Genuinely, I'm saying this. You can join it, the December batch, you can register. Many people have already registered in advance. You have to just pay a small amount and register. The course is just 12,500 rupees, but it's life changing. Life changing. In that, I teach technical analysis from the very basic, from the KG level to the advanced level, that is PhD level. Simple topics are taken up first, then we go to more advanced topics. That is how I like to structure, because once people go to YouTube here and there, they find so many people talking about so many different things, they get confused. Now we want to structure it properly. So the learning is structured in a beautiful way. If you want to join that course, definitely do take a call on it. Do find out more about it. Do get in touch with me and my team. But if you are here on Telegram also, you're more than welcome to, anytime come to any of these free sessions. I'm always there if you want to ask anything. And again, as I was saying you, apart from the group course, there's a course which I do on the basis of one-on-one, which I take not more than two people at a time. So one of my clients or one of my students in the one-on-one consultancy, where I focus a lot on trading psychology and personally tailored things also, that guy was a positional trader. But the problem with him was that he thought that he would get a trade very frequently from the positional point of view. And what ended up happening that, like, he ended up doing very well as a positional trader after he started giving at least 2 to 3 weeks before making a trading decision into execution. Because you have to understand, things take time. On the 5 minute chart, this sort of a setup evolved. As we were speaking, this sort of a setup evolved. Here, any of my student will be able to tell you that, okay, what this setup is about. Let's say, for example, take up the Bank Nifty chart. I take the 5 minute chart. I was just talking about there's a support zone. Okay. Now, in this support zone, I see that it is extremely hitting the lower end of the lower band of the Bollinger Band, right? Now, let's take up what is the potential momentum indicator we are getting. Now the momentum indicator over here is coming and showing us that there is a resistance or around the 40 area which it has made. So before the fall only we can gauge that the momentum is slowing down. There is a strong divergence. Price is making a lower low, momentum indicator not making a lower low. All this put together is an amazing pullback pattern. Now you have to put together a lot of things. Are you getting that? I'm trying to make these sessions simple because it's a free session and not everybody is learned from me earlier. But those who are right now my students over here, they can clearly understand what I'm trying to say. Now this is a scalp on a 5 minute chart, but I'm more than sure many people have made buying 10 20 lots of Bank Nifty options. They made easily 8 10k in just a small move like this, and this just hardly 20 30,000 capital requirement. And those my students who are trading with 3 to 5 lakhs of capital, they could have made easily a handsome amount over here, maybe 30 40 50,000 rupees. But if you can identify it very clearly, now what happens in the small time frames, your reaction time is lesser. Your reaction time is lesser. In the bigger time frame, your reaction time is more. But you need to control your position sizing. You need to understand the bigger time frame trades don't come all the time. Like for example, Shakti ji, he's my student, and he does very good trading. He's just joined the last batch, and his I think it was the August batch, the batch even before the last batch. So he's over here, and he told us he shorted Sun Pharma, and he got amazing trade in Sun Pharma. So all of you know, like a smooth trade is totally worth the time given to a smooth trade. Okay, I don't like to discuss the scale of anybody personally, but definitely he would have made a decent amount of money with this trade, right? So there's, the never underestimate the value of a trade which comes when you give time to the markets to move. If you are ready to give time to the markets to move, you will get amazing, valuable trades which are worth their value in gold, literally. And if you want to learn, definitely you should join me, and definitely you should give it time. I don't say you will become a billionaire overnight, but you can change your life and your destiny with markets completely. That is what I stand for a process. And in that process we have very interesting things, and the learning and the journey is amazing. It takes a 2 month time. So we talk about the market phases as we're going across the 2 month period of that course also, along with the topics which we are learning. Now let's take up the next question by Mr. Padam. Okay, and then from Mr. Just one second, where's this question box? I think which stock was he talking about? And Sipla. Okay. So Mr. Padam was asking about L&T housing, if I'm not wrong. Yeah, L&T housing. Absolutely. Thank you, Mr. Padam. And then I come to Fani ji. Okay. So L&T housing, yes, extremely bearish in the medium term. Now, in the long term, it has been up. I know that. In the recent past, we also saw a lot of news coming in, and therefore this stock is a bit news sensitive. We must not forget. My personal view on this would be broader view would be on the short side. So I would be very nimble if I have to take a trade on the long side over here. That is my personal view. Currently, I don't have a very strong trading view on this stock, and I would like it to take some time to give me some setup so I can give a clear idea to it. But right now, I don't have any clear idea on it. That is the best I can tell you, is to stay away if you're looking from a positional point of view, and until of course something else builds up in the stock. And from the intraday point of view also, there is nothing much because it's been sideways, and stocks being sideways and index being sideways are different. So for example, we saw index being sideways over here, and they're still tradable on intraday basis because the volatility is less. The stock volatility is higher, so you can't go below hourly charts if you want to trade very efficiently. Right. So you should stick to certain parameters. I mean, like for example, we got Century, we took the 15-minute chart, but then there was a very strong build up like that. If you get, then fine. And then coming to Cipla. Cipla has been one of the very interesting stuff. I've been talking about it across all my YouTube, etc. And amongst the students also, this has been a excellent stock to go short on, because you saw the descending triangle pattern. This is the daily chart. Now it doesn't really seem like that, right? But you see the concurrence of what we saw in Sun Pharma is also happening over here. So I put the support line. The support zone was clearly taken, and after the support was tested, the downtrend continued. Here was a small distribution, and there was a massive fall which happened. Now let's get to the hourly chart. And I had mentioned that there had been a descending triangle pattern over here. You can see there's a descending triangle pattern over here, right? So it is in a very strong bearish mood, and I would not touch it from the long side. From the short side, you can look for interesting things to happen. Even stocks which have been, you know, in the recent past, like Balakrishna Industries, right? So we saw that there's a strong down move. Of course, immediately a new down move may not come. But when I say you should look for means that your bias and your direction of the trade should be with the broader trend. Because the more strong moves are with the broader trend. The bigger moves are with the broader trend. Okay. So I hope I've been able to answer a lot of interesting questions. Thank you for asking the questions. And definitely you can change your life with markets and your destiny with trading if you are ready to take the correct step. Everybody wants to become Michael Jordan overnight. You have to practice. For being able to say things, I practice. When I'm saying things in the sense I'm saying things and they are happening right now as I said it. Right now. And if we had the session 1 hour back, I most probably would have said that you should go short. And that would have been even and you if you go and check the past live videos, sometimes these things happen depending on what time I do the live session. So if you're ready to, really get into a sync with markets, because you'll make money if you're in sync with the markets. So you don't get your nobody is born in a way that they get in sync with the market. They have to nurture that talent. And to nurture that talent, you need to keep your mind with objectivity. You need to study, you need to put in work. But once you put in the work and once you get the hang of it, you can just have a very different kind of a lifestyle altogether. 9 to 3:30, most of the days I'm done by 10:30 if I have to count the money. But I'm so passionate about trading, I like being involved. So I go beyond that, and often I just surpass my targets. It's very easy to live like this, and it's very chilled out. It's just that people try to make it a very big deal about the markets. At some level, they subconsciously don't deserve to be happy. They don't feel that they deserve to be rich. And I'm saying you need to think that you deserve to be rich. Raise your hand, those who think they deserve to be rich over here. Raise your hands, those who think they deserve to be rich. Those who think they deserve to be rich and wealthy, raise your hands. Right? Thank you so much. So you deserve to be rich, right? So you need to take the steps, whatever that inspires you to take yourself to the next level and raise your game with trading, even whichever other profession and business you are in your trading and investing and anything that you do. Thank you so much, guys. I had a great time and a great session, and I will see you all sometime soon. It was a wonderful thing which happened. Thank you, Sumit. Thank you, Mr. Rahul. And I really look forward to coming again wherever next I kind of schedule it, and I will announce it on Telegram. Stick around, guys. My Telegram channel may not be almost all the time about bang bang boom boom. This stock is going up, this stock is going down. But generally, I like the study approach, and people who have been, joining hands with me over the last 12 years of my trading, out of which I have 9 trading years, core experience and 4 years of teaching. We all have benefited and grown together. Thank you so much again. Take care. And you can get in touch with my team if you want to join the course. You can check out some messages on the Telegram channel. Take care. Good night. Bye. Enjoy.